Welcome to PwC IFRS Talks, your source of all things IFRS, technical accounting matters, business issues and regulatory updates. I'm your host, Dave Walters. In today's episode, I'm joined again by Carsten Gausauger, who is a member of the Interpretations Committee, in fact has just attended his second Interpretations Committee meeting. And Carsten will be sharing with us what went on at this week's meeting at the Interpretations Committee. So Carsten, welcome.
Thanks very much, Dave.
Excellent. And your first meeting featured a variety of very interesting topics, including cannabis. Has the Interpretations Committee maintained its connection with all things topical?
Absolutely, it has. We have some, really exciting topics on the agenda again this time. Including accounting for some football transfer arrangements.
Excellent.
So that's something a lot of people can get excited about. And if you look at the combination of, the passion for football and the passion for accounting, that's how the discussion went.
Excellent. And what we're talking about here with the accounting for football transfers is actually recording them in the books rather than trying to get the manager to justify why he spent so much money on that particular player.
That's right.
Excellent. Very good. So Carsten, I think for this week's meeting there was one agenda decision to finalise, and that was in connection with IFRS 16.
That's right.
Would you care to share with us where we got to?
Yeah, actually this was, a very special Interpretations Committee meeting because as we noted in the meeting, it was the last IFRIC meeting of the decade.
Excellent. Did you go out with a bang? Was there a little party?
I think we probably did.
Excellent.
So on the first topic where we finalized an agenda decision, quite an emotional topic that was discussed for a long time, which is about, actually it's two topics. It's about the lease term, determining the lease term, and a related topic, which is determining the useful life of useful improvements. And there was especially a lot of controversy on the first question. The second one was much less controversial. We did receive quite a few comment letters on this matter, and roughly about 1/3 of the comment letters agreed with the technical analysis of the committee. So around 2/3 of the comment letters actually disagreed with one or more aspects of the committee's technical analysis. So obviously that means we need to do some thinking on how we want to go ahead with that. But perhaps just to introduce into the topic again as a reminder, the issue really was about, how to determine the lease term of a cancelable or renewable lease, and specifically how to apply the term or the notion of penalty in paragraph B34 of IFRS 16. So the question was really, is that term meant to apply narrowly, just payments of penalty, or is it a broader concept, including economic considerations, economic incentives or disincentives for the parties? So in terms of the conclusion, I think, my view is that, it's pretty clear that the board's intention was to have this as a broad concept, a broader interpretation of penalty, including economic aspects. So it's an economic assessments. So the question was very much around, is there enough in the words of the standard to conclude on this, or whether a narrow scope standard setting would be the right way forward? So we had quite mixed views on this one. Obviously, some considerations include the timing, when this would be applicable, and also, the issue about, are you opening up a much broader debate than just penalty, broader consideration. And so at the end, it was quite a narrow decision, and we had a small majority supporting finalizing the agenda decision, basically as drafted. But that was, as I said, very close vote. But, I think in practice, it probably won't make that much of a difference. I know that some people may have a different view on this one. It's quite controversial, but I think it's important to remind people in this context about the concept of having sufficient time to implement this. So regardless of, how you implement it, if you're going ahead with an agenda decision, I think it's, we will highlight that people will have sufficient time to implement that. So for a lot of companies, I think I wouldn't be surprised if a lot of companies weren't able to implement that for year ends.
Yeah. So they would be harking back to previous publications from the Interpretations Committee and the board that that relates to how quickly companies should implement agenda decisions, and the concept that says actually just because it's been issued it's an agenda decision doesn't mean it's applicable absolutely straight away if that's not practicable.
And I think that's especially important for this agenda decision. I know, we are just 35 days away from year end, and I think the committee perfectly acknowledges and realizes that it will not be possible for many entities, at least for those who have substantial number of lease contracts, to implement this completely by year end. So I think that's accepted.
Okay, so you kicked off with something relatively uncontroversial, the topic of lease term, and that agenda decision has been finalised. I think there was another.
Maybe just one more mentioning, because there was the second issue, part of the agenda decision, which was on the depreciation period for for leasehold improvements.
Yes.
And I think those two questions are interrelated. So if you accept the broad interpretation of penalty as the committee has now decided, then that means that there should be some consistency in the depreciation period and the lease term.
Yep.
Now the committee acknowledged it may not always be exactly the same, but there clearly is an interaction between the two. So I think to give an example, if you have substantial residual values in your useful in your leasehold improvements at the end of the lease term, that may indicate that there is actually an economic incentive, and you should perhaps reconsider whether you got the lease term right in the first place.
And that sounds like a sensible interpretation of the standard and less controversial. So that was the first lease issue, which was a finalised decision. I understand there was there's a debate of another IFRS 16 question.
Yeah, that's right, and that was also quite an interesting discussion. The committee did not conclude on this matter, and we're not going to issue a tentative agenda decision on that one. And the reason is not that there was any sort of disagreement on the analysis. I think people broadly agreed with the analysis in the paper. It was more because quite a few committee members felt that one aspect was missing in the analysis, so it's kind of incomplete. So the issue is about a sale and leaseback transaction where you have variable payments in the leaseback, and let's talk about an example where you have, let's say, fully variable lease payments. And so the question was, when you have a transaction like that, IFRS 16 paragraph 100 tells you to measure the carrying amount of the right of use asset as a proportion of the right retained, and you measure the gain as a portion of the rights that you have transferred.
Yep.
So and these two are, I guess, kind of interrelated. So what that effectively tells you in a situation like that, the first observation that's made is, if you have fully variable lease payments in the leaseback, that doesn't mean that the right you have retained is zero. Just because in a normal lease you wouldn't recognize any fully variable lease payments. So you need to come up with a calculation, and I think the committee acknowledges that there may be more than one method to do this. You need to come up with a calculation what the carrying amount of your right of use asset is, what the proportion of the right of use is that you retained, and the one that you transferred. The problem, I think, with that is, I think my notion was that the committee agreed that you would have some carrying amount of the right of use assets, so it's not nil, and you would not be able to recognize the entire gain upfront, which was one of the views in the paper.
Yeah.
So I think that was there was agreement on that aspect. But then I think the problem is that if you do this calculation and you come up with some measurement for the right of use asset, and when you then do your journal entry, you have you debit your carrying amount of the right of use asset, so you have some measurement for that. You have the cash that you receive. You have the gain. So all of these are clear numbers, let's say, and then you have some residual amount, right? And that's I think it's also quite clear that would be a liability. But there was a question about what kind of liability is this? What is it exactly? Yeah. And I think it's clear that it's a financial liability, but there are quite a few questions around what do you do with this liability, especially in subsequent measurement.
Yes.
And that's why the committee decided at the end, we should, even though not asked specifically, we should be helpful to our constituents and also do some more analysis on what this liability really is. So this, so the staff has been directed to do some more work on this, and we will bring back a paper to the next.
And we should wish the staff well in that particular exercise, because that's not straightforward.
Yeah, you're right.
Excellent. So that's going to come back to the first meeting in the 20s of decade. Will be a highlight at the?
Yes, that's gonna be. I think that's gonna be on the agenda for the first meeting in the next decade. Yeah.
Excellent. So the Interpretations Committee can start the 2020s with a bang. So that's the leases questions you debated. You then debated football, and actually, the first lease question we talked about involved penalties, and I would observe that an Englishman here and a German talking about penalties and football normally doesn't go very well. Certainly not for the English. But this, the football agenda decision was actually nothing to do with penalties, but was to do with the emotive subject of players and transfers. So would you care to tell us what the committee debated?
Yeah. So the fact pattern was broadly where a football club transfers a player to another football club, and basically receives some consideration for the transfer. Now, in the specific fact pattern, the player was registered in an electronic transfer system, and that meant that this registration means that the player would be unable to play for another club. Mm-hmm. And I think what was also highlighted in the submission is that legally you cannot transfer this right, so the employment contract is terminated and a new right is established. So the submitters suggested that there is not a disposal of that intention, of that player right. And so the question was, basically whether you would recognize revenue for this transaction, mm-hmm. or whether you would instead recognize a net gain or loss outside of revenue. That's basically the question. But I think it's probably broader than just football industry. You can have similar transactions, if you think about media, pharma, and things like that.
Yeah. So the question is whether it's revenue or gain or loss on disposal of a non-current asset, an intangible asset.
That's right.
Okay.
So in analyzing the issue, I think the first question you need to answer or you need to analyze is whether it's an intangible within the scope of IAS 38, mm-hmm. or whether it may potentially be inventory. I think, practically speaking, this will typically be an intangible asset.
That's the predominant method of accounting at the moment.
Yes, and that's what people are doing at the moment. I think the committee acknowledges that in theory, it may potentially be possible to have inventory if you meet the inventory definition. So you need to look at that quite carefully. There will be, actually put some extra words in that, highlighting that you would need to analyze whether you actually do meet the definition of inventory, because that would mean you need to have a business model, of developing and then selling players, which personally I think is quite rare in practice, but it could be, in theory, it could be possible. But I think the distinction is quite important, because you can only get to recording revenue if you record the right as inventory.
Yes, because otherwise the intangible asset standard essentially says you would not get revenue on disposal.
Yeah, I mean IAS 38 is very explicit that you would show the net gain outside of revenue, so you would not show it in revenue, and you would also not gross it up. So that's why this distinction is so important. And then I think the final observation I would make, of course, it's also important to have consistency then with the presentation across the financial statement, especially in the statement of cash flows.
Oh yes, because inconsistency in cash flows is a favourite hunting ground of regulators, as we know from previous experience. So so the committee has acknowledged that you need to understand the business model of the club, and that will drive your accounting. Yeah.
So the agenda decision will basically be finalized as drafted with this few, let's say, wording such amendments, especially around the clarifying that you need to look carefully at the definition of inventories.
Excellent. So that's something to look forward to. And talking of agenda decisions to look forward to, we had one on the subject of income taxes.
Yeah.
Which we don't have a huge amount of time to go into the ins and outs of, but would you care to outline the question that the committee were debating?
Yeah, I mean, as you suggested, I'm not going to go into too much detail because it's going to be quite a complex issue, and it's only relevant in some territories, such as Australia, Singapore, Canada, and the UK as well, I understand. So the question is basically when you have multiple tax consequences of recovering a single asset. So the example is you acquire an intangible asset with, let's say, a limited useful life. You depreciate that over the useful life. The residual value is nil. So in a situation like that, where you have a tax regime where the entity receives no tax deduction in respect of the amortization of the license, but you do get a tax deduction when the license expires, capital gains tax regime. The question is whether, and you're not allowed to offset these two effects, whether you would apply or identify a single tax base for the transaction, or whether you would account for the tax consequences under each of these systems or tax regimes, tax systems separately. So the committee concluded on the latter view, which is, I think, consistent with our view and what many companies have done in the past. So if you're interested, there's quite a detailed paper looking at some of the details of this, but as it's only relevant in certain parts of the world.
But as you say, one of those territories is the UK, so it's, we do see this. There's potentially different tax rates that apply. There's different recognition criteria for deferred tax assets subject to capital gains. So it is an agenda decision that people need to be aware of, but we haven't got time to go into further detail. So I think that was the end of the key issues that were discussed by the agenda committee. But there were the interpretations committee, but there were a couple of other things that were on your list. So what were those at a high level?
I mean, there were two other issues on the committee's agenda, but we were not asked to make any decisions on those. So it was really just about asking input from the committee. The first one was the post-implementation review of IFRS 10, 11, and 12. And there was quite a good agenda paper on that one, highlighting some of the issues that we are seeing with IFRS 10, 11, and 12. So if you're interested in that, I suggest you have a look at that agenda paper. I think it was agenda paper 3. It's quite a good overview of the matters that have been identified. We discussed some extra nuances of that, but I think if you're interested in that, have a look at that paper. The other issue was the agenda consultation, which obviously is quite an important topic because it really decides upon the direction of the ISB for the forthcoming years. So I think that's quite an important debate, and I think there was a notion that that the board should have sufficient time to deal with some of the issues that will inevitably come up in relation to the new standards. So IFRS, particularly IFRS 15, IFRS 16, and IFRS 17 as well. So that should be kept in mind. And some suggested that perhaps other than that, the board should focus quite a bit on maintenance rather than doing major new projects. The final point I would like to highlight, I think there were a lot of people suggesting that there's one particular topic that the ISB should invest time in, which is the area of intangibles.
Right.
And I think there was a strong sense amongst the committee that is an area where additional work needs to be done. But also there was a strong notion that we need to be very careful in determining the scope of what exactly we want to do. Because I think as history has shown, this is not an unproblematic area, and you need to be thinking very carefully where you can actually be helpful. So I think the overall notion was, yes, we need to do something about it, but we need to be careful in terms of determining the exact scope of that work.
And I guess that project has been on the agenda for a while in various guises and deals with when should you recognise intangible assets depending on how they they have been created. We do have a very mixed model at the moment.
Yeah.
And the question is, do you want to have another look at that? You could start from first principles, or as you say, you could have a more focused project that would have a chance of completing before the next decade is out.
Exactly. That was also a comment made, before the next decade is out, or let's say in the working life of somebody in the room. That's what someone said.
Indeed. So it's been thank you, Carsten, for sharing that insight. It's been a busy year for the Interpretations Committee. There's been 30 or so items, I think, that have been debated. And do you think you'll remain equally busy as we go into next year?
I think so. I think we. Of course, I don't know, but I'm guessing we might see quite a few issues coming up in relation to IFRS 16. We are already seeing that now, and I wouldn't be surprised if more of those are coming up in the next year. And then obviously, there are other issues coming up, IFRS 15, and other standards as well. And as we move into the next year and perhaps next years, plural, I think there will also be more IFRS 17 issues coming up as well. So that's also important to keep that in mind.
Excellent. So you're going to be busy, but thank you for sparing time in your busy schedule to come and talk to us through the latest machinations of the Interpretations Committee. So thank you, Carsten.
Thanks for having me.
It's a pleasure having you here. Thank you all for listening. If you've got any technical questions, by all means look to our guidance on the PwC Inform or pwc.com/IFRS. And in the meantime, happy accounting.
The preceding programme was brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitute for consultation with professional advisors.